What's up, everybody? Welcome to Send It, the official blockchain and cryptocurrency podcast from OKX Insights. My name's Adam, and as always, I am joined by my fellow senior editor, Hunain Nasir. Hunain, how are you today?
I'm good. Hope everybody else is good too.
Good. And also, as usually, I am joined by our senior copy editor, Maxwell. Max, how's it going?
Good. Glad to be back.
And we are also joined today by our team lead, head of content and comms, Olivia. Olivia, how's it going?
Hey guys, doing well. Glad to be here.
Good. We're all doing well. But the markets are not doing so well. So let's throw it over to Hunain, who's going to give us a market update, and we'll discuss.
Okay, so before we begin though, quick note about the number of lines on this chart. So this is not particularly useful for trading, but I use this chart personally to kind of mark areas of interest or points where I would expect the price to stay for a bit or bounce from or find resistance at. It's helpful to kind of keep track of where the price at if you have like a macro trend in mind. So Bitcoin
also,
has fallen a lot.
Sorry, Hunain. Before we get into it, also real quick, none of this is financial advice.
Definitely.
It's just our thoughts and Hunain's thoughts on the markets, but it should not be used as investment decisions or all that stuff.
I make all my investment decisions based on lines.
All right. So the long and short of it, though, however, is that Bitcoin has fallen a lot since the 69,000 USDT top we saw in November. Actually, it's fallen around 52% since then, from top to bottom. We saw this big flash crash on December 4th. Then we saw a bit of a relief rally that extended throughout Christmas, and then kind of the last day for that was the 28th of December. And since then, it's continued this downtrend. So before I kind of get into the commentary of what we're looking at, what we're expecting and all, I wanted to kind of give like a broader view of how typically markets work and what price action denotes in terms of retail traders or investors and whales and smart money and market makers. So essentially, a market like Bitcoin, for example, and even traditional markets, they've got retail players or retail traders who are typically smaller traders who have small capital, relatively small capital and small sizing when they trade. And then we've got market makers, we've got big whales, we've got liquidity providers who are market makers, and then smart money. So these are the people who have oftentimes a lot of money and oftentimes connections and information that the retail player is very unlikely to have. So the general thesis of the market, and also presented by the inventor of the Wyckoff schema, is that there's a composite man, the essentially that combines smart money, that combines whales, that combines big players, and that composite man or that entity has all the information necessary for the markets to perform in one way or the other. So essentially everything is priced in because somebody knows something that you don't know. And it's unlikely, it's very difficult to have an edge in a market like this for a retail player, because you're essentially going with the flow and you're hoping to kind of catch a trend. It's very difficult to find that trend or preempt that trend or discover it before it happens. So that's a general one theory of how the markets work. So when we look at a price chart like Bitcoin's, I have it open on OKX, it's a daily chart, we see that it came from around, if we go far enough back, obviously we'll see that it crashed to around 3,800 in March of 2020 with the first COVID scare. But we're looking at this uptrend here. Let's say this is like the end of 2020, October. This is the first time it kind of crossed above $10,000. And then it's been in a steady uptrend, for example, and you see this big peak here and a bit of a decline, and then you see the actual big price jumps, which, for example, from this decline to this is 120% just from here. So The general, the theory about how this price action materializes is that a lot of the smart people, smart money, and the market makers and the big players and the whales would accumulate at lower ranges. Let's say for our purposes, we'll say, let's say under $10,000. We actually have a research published on OKX Academy that it was published back in October of 2020 that talked about how on-chain data and data from our research partners at the time indicated that institutional investors and essentially smart money and big players were accumulating Bitcoin below $10,000. So we have that research if you're interested and you want to read that. So for our purposes, we'll say that we will assume that they accumulated below $10,000. So they continue accumulating, let's say, and the point of that accumulation is to sell higher. I mean, that's the essential, the purpose, the goal of anybody who's trading or is in the markets. They want to buy low and they want to sell high. So with smart money, they have the ability to accumulate at scale and then distribute at higher prices. So in order to distribute something at the maximum possible price, what anybody has to do would be to create demand for it. That demand can come from various things. For example, in Feb of 2021, around this point, Feb 8th, I think this was the candle here. This is when Tesla announced that they had Bitcoin, they had bought Bitcoin on their balance sheet, they had Bitcoin. This was when this huge uptrend started. So any news, any kind of, like a big macro event, for example, the COVID scare in 2020, the first time it came was also like a big event that caused capitulation in the market. So any event can kind of cause this big trend shift. But for the purpose of the smart money, they want to buy as low as they can and they want to sell as high as they can. And oftentimes, this phase is called the markup phase. So where they accumulate around a lower price, then they start marking it up. Marking it up is essentially kind of, creating demand for it, creating hype for it, making sure that the retail traders and investors kind of jump in. You'll see that phase is marked by positive news, this kind of like building up mania, and then everybody's talking about it. And with the price going up, that kind of fuels that mania, and then everybody kind of wants a slice of that pie. So that works in the favor of smart money because they've bought, let's say, in our example, we're talking about $10,000. Even when it's at this peak, that's $40,000. That's 4x what they bought, even if their average is $10,000. So the point is that it's fairly easier for them to make huge gains even on something like Bitcoin. And we're not talking about altcoins because there the percentage gains are much higher. But obviously, that's a different discussion. But obviously, when you have such big players in the market, they also want liquidity and they want a robust market structure with little slippage. So that's why Bitcoin is kind of ideal there because of its volumes and liquidity on top exchanges like OKX. So we're talking about this macro trend that, once the smart money has accumulated, they want to distribute at higher prices. So that also means that you will see in this distribution structure, which is essentially this whole part here, is that it's not a one-time thing. It's not like the price goes to one point and then suddenly dumps all the way lower, because that's not in the interest of the smart money, of the distributors. They want to distribute as high as they can. Obviously, any selling pressure will drive the price down, but then you kind of find relief where smart money kind of stops selling for a bit. They reaccumulate a little bit. They kind of keep the market afloat so that it doesn't just crash in one day, because that does not benefit anybody. You kind of want the market to go on. That's how it's like something that has to keep on giving. So for that to happen, you have to give it relief. You can't just dump it to zero, even if you could. So you'll see in the distribution structure that the price reaches a certain point, and then obviously with selling pressure, it comes down. With profit taking, selling, it comes down, then it kind of tries to make another peak. And if you correlate that to, let's say, accumulation distribution indicators, I don't have one open right now, but if you correlate that, what you typically see is that even with RSI, what you typically see is that these peaks are not followed by similar peaks in most momentum indicators. So on those indicators, for example, the RSI, you'll see that this higher peak does not essentially have a higher peak on the RSI. It usually has a lower peak. Same with accumulation distribution indicators. So that kind of indicates that these peaks are actually weaker than, let's say, this peak and the subsequent, the peak before that. Because the distribution is happening at these levels, and essentially the retail people, or let's say the late bulls or the late longers are kind of getting trapped. So one sign of that, while we're on it, I'll just point that out, is this candle here with this long wick on the top. So this indicates that this was the point where the late longers, the last bulls, so to speak, were trapped here, because they got sold into, and once the price fell from here, it didn't really go back there. So anybody who bought here on the 14th of April was kind of trapped until the 20th of October. Anyhow, so we see that. And then once distribution has kind of completed for that time being, you see like a bigger dump, because then retail also starts to sell and they realize that this one of these peaks was the top and they missed it. And then everybody also obviously wants out. They want to cut their losses. People start capitulating at some point around here, let's say. And then this is a very classic kind of like supply exhaustion structure, where you see that the price touches a certain low here. So we saw that in the May crash on the 19th of May here. So this was the first time the price touched this level, which was $29,000, 29,000 USDT here. And then obviously, because it had become extremely oversold, we see that this long wick kind of indicated that there was a lot of demand here. People wanted to buy, which they did. But typically, so the point of me kind of explaining that is so that when we come to this point here, the latest price action, it makes more sense to when I give my opinion of what's happening. So that's why we're discussing this previous bottom structure. So we discussed already.
Just to get the time frame for people who can't see the chart if they're listening, like that lower bottom range is from May till when?
May till July, end of July.
Okay, thanks.
Yeah, so we saw this reversal on the 21st of July. That's when the trend reversed, and then we saw an uptrend again. So right now we're talking about the bottom structure that formed between the end of May and the end of July. So coming back to the smart money theory, and we're talking about the people who accumulate smart money, or the composite man accumulating and distributing. So when the price crashes to a point where, let's say, there's a lot of supply and demand, and then you see that with long wicks, and you see that with violent volumes and a lot of volatility in the markets, you reach a point where you have to reaccumulate if you are intending to redistribute again. Now, obviously, because the macro view on Bitcoin is still bullish. I mean, we're talking long-term horizon. We're talking 5, 10 years, 20 years from now, unless something really catastrophic happens or something really damning kind of comes up, let's say, like really strict, harsh regulation or whatever not. Unless that happens, the macro view on Bitcoin is bullish. So that means unless it's going to die tomorrow, whoever is selling here, whoever is distributing, would want their coins back and more at lower prices, because it doesn't just make sense to sell something that has a macro bullish view. So that is why you would assume that anybody who's distributing would want to reaccumulate. But the point at which they decide to reaccumulate is where, retail and everybody else, whoever possibly they can exhaust, they do exhaust. Because the point is to buy them as cheap as possible. So this phase is typically marked by bearish news. This is marked by, for example, in the past, it's been marked by China Bitcoin mining ban or Bitcoin ban in general, or hash rate collapses, or whatever negative news that you can find. This kind of zone is marked by that. And then what we see in a typical bottom structure is that the price kind of oscillates within a tight range. For example, it's this typical range here between, let's say, 40,000 and 29,000. So you see the price here oscillating in this range. And the point of this is to shake out whoever is left holding their coins, because the smart money, the composite man, kind of wants to get as many cheap coins as possible. And to do that, you have to capitulate long-term holders. You have to, because short-term holders typically capitulate around this time, around if you're not watching, around 13th May, 16th May, 15th May, around these times when there's a big slide, that's where short-term holders typically capitulate, because they're bought around this price and they're eager to cut their losses. But long-term holders have typically bought at cheaper prices. To shake them out is more difficult, because they are typically they have an improved chance of being in profit. And even if they are facing losses, those losses are typically not as steep as somebody who's bought during the distribution phase. So to shake them out, you have to kind of exhaust that zone. You have to kind of make sure that the market flips bearish. You want the sentiment shift to be bearish. You want to see people not expecting a bull run from that point onwards. Only then a lot of the long-term players will capitulate, will essentially sell their holdings, assuming that it's going down from here to, let's say. So recently we're looking at, for example, influencers tweeting about 20,000 and below. So that's kind of one indicator of the market sentiment turning bearish and people expecting huge, steep drops. So essentially, that's where that's the point where you will see smart money buying cheaper coins. Sorry. So coming back to this structure, we see that the price oscillates a lot here and then slowly just starts dying down and keeps testing this one zone, which is $29,000. The price tests this once, twice, and one final time before it reverses from here. So this is also a very interesting point, and this is true of most bottom structures. The reason for this is because the accumulators, the smart money at this point, they want to make sure that they have tapped all the supply at this level. This level is of interest to them. So they want to tap that. And the way to do that is to hit that again and again and again, and make sure that as much volume, as much liquidity they can pick up from here is taken before they start marking it up. Because once they start marking it up, obviously anybody who's left holding will be in profit, and then you're kind of unlikely to get them to sell cheap. So this is a typical bottom structure formation. This is marked by lowering volumes. This is marked by a lot of things. We're not getting into the weeds of a lot of, for example, order flow and footprint data, because that also kind of corroborates what we discussed here. But for a general view, what you can look at volumes, you can look at general accumulation distribution indicators, and then you will see that during this phase, there's a divergence often. So if you're looking at, for example, volume and whatever not, you'll see that this bottom structure is marked by divergences in volume and RSI and the price structure. So we see that after the last touch here, the price reversed, and also shout out to Max for calling this bottom on Forbes. And I think we can add the link to that in the description if anybody is interested. So we see that after this whole reaccumulation structure, we had another markup phase, and then we saw kind of like a brief, again, reaccumulation here, and then another markup phase, and then distribution here. So that brings us to now, and what we discussed in the past is kind of relevant here. So we know that this zone, in which the last time reaccumulation happened, let's say between 37,000, loosely speaking, and 29,000, is of interest because the last time this was where all the reaccumulation happened. So it's naturally that when we fall into this range again, which is now, we should be interested, and we should look for signs of a similar bottom structure formation. And as discussed earlier, this bottom structure formation is from a long-term perspective, it doesn't happen in 1 day or 2 days. This one actually took, this one actually took 62 days to happen, 62 days to be complete, after which we saw the reversal. So that does not necessarily mean that we're going to see another 62 days from here to the possible bottom. But what we do know, and what does make sense, is that after all this distribution here, reaccumulation in this zone should take more time than just like a 1 day bottom. Because, as I mentioned earlier, the point of reaccumulation, the point of bringing the price to this point, is to get as many cheap coins as you possibly can. And I tweeted about it as well, and we saw this on the 24th and 25th of January. We saw some decent buying actually stepping in, despite Bitcoin having fallen from all the way here to 50%. It was only now that we saw some decent volumes in terms of buying volumes coming in and bids coming in. So this is definitely an area of interest. But the point here is that this is unlikely to be the bottom for now. This is, we should see more oscillation in this zone. We should see volumes drying out a little bit. We should see bulls flipping bearish. We should see a more, let's say, a bearish sentiment that is hard to shake off for now. We should see funding rates be consistently negative, and I'll come to that as well. We should see a lot of things happening in this zone before we can call it a proper bottom zone. Before we can identify a proper bottom in this area somewhere. So that's kind of like where the market is at right now. And we're looking at today, for example, and yesterday, we're seeing this bounce here. It's gone up roughly 15% from the bottom of 24, which was 32,928 USDT. So the price is right now 38,150. That's about 15% up, which is good. It's a good sign. And as I mentioned, we saw some kind of buying happening here. Was that the bottom? We don't know yet. But like I said, the point of this whole discussion was that it's unlikely to be the bottom. So I personally would not FOMO into, buying everything here. I would want to wait for a few days to see how this structure evolves and kind of see all those things that we talked about in the last bottom formation. So that's where the price is at now. I'll quickly go over some of the indicators, some of the data that kind of also helps us find the bottom here. I will start with the Bitcoin funding rate. I'm looking at Coinalyze. This is the aggregated Bitcoin funding rate chart. I'll quickly change this to the daily time frame, and just point out here that this on the screen, if you can see, this is the bottom structure foundation we discussed last time, the structure between end of May and end of July, and we see that this was consistently, the funding rate was consistently negative for most of the period. And we see the same happening in this short-term reaccumulation phase. The market had kind of flipped bearish. We can see the funding rate being negative again. And then during the flash crash, we saw the funding rate become negative again, which was significant because people who bought this wick on December 4 were in profit for a month nearly. So this was a good place to buy for at that point in time. And now, yeah.
Interrupting. Can we get a little TA 101? What is funding rate? And
Sure.
Negative versus positive meaning?
Sure. So the funding rate is essentially, it's useful for perps, perpetual swaps. And because perpetual swaps never settle, unlike typical futures, you have to have a mechanism to bring the price in line with the spot price. And that's done by the funding rate, broadly speaking. The funding rate has several uses, several purposes, but one of them is to make sure that, for example, when the funding rate is positive, the bulls are paying the bears the longs are paying the shorts essentially to hold their positions. And then when the funding rate is negative, the shorts are paying the longs to hold their positions. So essentially when the funding rate is negative, you're looking at the market sentiment is bearish because the predominant trade at that point in time is the short trade. And to keep that short trade open, you have to pay the longs. To incentivize them to keep their longs open because they are going against the market. So in a bullish market, longs are, the funding rate is positive and green here. That's because longing is the predominant trade and you have to incentivize shorts to keep their shorts open, and that's why you pay them. So it's not a fee that is charged by an exchange. It's directly a rate that is paid between the users, between the long and short users. So coming back to that, so we see that here, for example, this is after a very long time, after essentially from the end of July to now, that we see again the funding rate going negative for more than 2 days. And then that's interesting because that's also kind of telling us that this zone is where we're seeing the sentiment shift after a very long bullish time frame. And we saw that the last time also during this bottom structure formation, the funding rate was negative for a while. So this is all something to keep an eye on. You'd want to see this persist for a while. If this turns bullish again, like tomorrow, for example, that's not necessarily a good sign for a very strong bottom. That might be good for a short-term relief. We could see the price go up to, let's say, 42,000, 43,000, I think. But that doesn't mean that we found that the bottom after which you see, let's say, 100% rise in Bitcoin. So for that to happen, you would want to see this funding rate being negative for a few more days at least, and volumes drawing down and everything we discussed earlier. So this is one. The second metric I wanted to show, and I'll end probably with this because we're kind of short on time as well, is the supply-adjusted coin days destroyed. So the summary of this metric, and I'm using CryptoCon for this. The summary of this metric is that coin days destroyed is calculated based on how many days, for example, one Bitcoin. It's an aggregated value, but it talks about how many days after which one coin was, for example, moved. So the higher this number is, that means at that point in time, at that price, a very large number of coins that were being held for a very long time moved. You can also see the definition here, for example, on CryptoCon itself. Supply adjusted coin days destroyed is a value adjusted by supply. It's calculated as the value of coin days destroyed divided by total supply. High values indicate long-term holders sold more proportional to the indicator's values. So essentially, every peak here is a point where long-term holders move their coins due to whatever reason, and because they're long-term holders, so the coin days that they were holding the coins. So for example, if I was holding one Bitcoin for 365 days, that's 365 days added to that coin. If I move that coin, one Bitcoin, after 365 days, I have destroyed now 365 days of that coin being held. So essentially, I was a long-term holder for 365 days, but at that point when I moved those coins, for whatever reason, essentially we assume here that the moving is for selling them, or transferring them to somebody else, essentially selling them. We assume that when you do that, that many number of days is destroyed. So it's a significant thing. So for example, if I was holding a coin for, let's say, 3 years or 4 years, and I decide to move it at some point, it could be of interest. But if a lot of people decide to move a lot of coins at a certain point, and all of them have been long-term holders, that kind of tells you that price point is of interest, and it's something that, let's say, a change of hands has happened. And that's also something that's important for the markets to happen. For any bearish trend or a bullish trend to reverse, there has to be a change of hands happening. Because let's say when the market is in a bearish structure, that means essentially all the people holding the coins at that point or in the market at that point are assuming that the price is going to keep falling and they want to sell and get out. When they sell at, let's say, at near the bottom, the people who are buying at that point come in with a renewed perspective. They're buying Bitcoin really cheap, for example. If we talk about the May crash after that, they're coming in with a renewed perspective. They're buying it cheap. Their risk reward is completely different. And they're looking at, for example, gains from then onwards. So for them, in that point in time, a change of hands has happened. A new cohort of people has come in and they've bought it, and they're okay holding it for a while because they've just entered the market. So that change of hands also supports the trend shift, because these new people have different motivations, they have different risk appetites, they have different expectations from the market, and different downsides. That's more important. So we see here, I'll quickly go through the recent few spikes here. We see this one big spike, if you can see it on the screen. This happened on the 17th of July, 18th of July roughly, when the price was 31,800. And we see another spike here around 40,000. Then we see another big spike on the 26th of September, and this was also a bottom structure, and this was also a bottom structure. Now, what we can assume here, we don't know the motivations behind these long-term holders selling their coins or moving their coins, but what we can assume here, and as discussed earlier, I was also kind of wanting to give that context for this reason as well. The point of driving the price so low and then continuing to tap that zone is to make long-term holders capitulate. You want them to sell you coins cheap. You want to get as many coins as possible. So this is also one motivation for the composite man, for the market makers, for the whales, to kind of get the long-term holders to capitulate.
And we know pretty much why this was happening, don't we? Because a lot of people have argued that the price started to increase after this last sort of liquidity tap in preparation for the Bitcoin futures ETF announcement, which one could argue was being priced in, wasn't it? So, you know, the market makers, the whales, the institutional buyers, the people in the know had good reason to accumulate at this level with the knowledge, or at least the assumption, that a Bitcoin futures ETF was in the works. So, which did time out almost perfectly to the next top, generally speaking. So they in air quotes did a pretty good job of pumping the price into fresh demand for this new product, which then got dumped on very similarly to Bitcoin CME futures back in December 2017.
Yeah, that's correct. Actually, thank you for reminding me of that point, Adam. And that's correct because we see the last spike here was in September. It was the 26th of September, and that was just days before the bottom. Because on the 1st of October, I remember we had a podcast episode. I think a day or two before that. On the 1st of October, the price, again, the market phase really did take off. And I think a lot of factors kind of combined there because October is historically the best month for Bitcoin, if I'm not mistaken. I think it's the best month in terms of historic gains. So moving into October, and then obviously people, they, as Adam said, knowing that October would be the month where a futures-backed ETF would be approved was like the perfect kind of like, the last, the liquidity tap on the 26th of September, they get long-term holders to capitulate, sell their coins, whatever not. And then they start the market phase. And then the ETF news, I think, came out on the 18th of October, if I'm not mistaken. Either way, just before that, let's say even if we talk about 15th of October, 2021, the price was already above 60,000. It was above 61,000, which is significantly up from 26 September when the long-term holders moved their coins the last time, and the price was 43,000. So it's nearly $18,000-$19,000 difference, which is big for Bitcoin and even bigger for altcoins. So moving into that, I think 18th October was when the ETF news came out, and then we saw the first top on the 20th of October with 66,000, and the price dropped again. So that, and then speaking of the Coindays destroyed peaks, so this, as is just mentioned, these peaks are important. And then we saw relatively smaller peaks during this distribution phase because long-term holders also like to take profits. What is interesting, however, is that during the latest decline, we have not seen a comparable peak in this metric, which indicates that long-term holders have not quite decided to sell or move their coins as yet, and they're holding. And that also kind of reinforces the view that the market sentiment has not fully flipped bearish. And we want to see that happening before we can confirm or have conviction in a strong bottom formation. After which you kind of, if you enter that kind of a bottom zone, you can kind of set and forget, and you can wait for Bitcoin to kind of go into the market phase again, and then you're very likely to stay in profit for a very long time. Not financial advice, obviously, but this is just the data. Like if anybody who bought within the zone in between the end of May and end of July, they were very quickly in profit as soon as early as the first 30th of July. As early as the reversal started, these guys were in profit if they bought between 19th May and 22nd, 21st July. So when you buy that zone, your likelihood of profitability is very, very high. And that's what I was talking about earlier. Also, the change of hands is very important. When you have that change of hands happening in a bottom zone, those people are going to hold for a while. They're unlikely to sell for, let's say, a 5% gain. They can hold for a while. And that also kind of, it's like a loop. It's like a cycle. So with that kind of conviction and that kind of new people coming into the market, that also promotes the price going higher. That also promotes Bitcoin to encourages the market to kind of go higher, because all those people are kind of backing that, and they're not deciding to sell early, as opposed to short-term holders or people who are buying within the distribution zone. So just last thing of note is that the Coindays destroyed metric is kind of trending upwards now. Like the latest price action, it is trending upwards, but it's far from any comparable spikes that we've seen in the past, which would indicate that the current price action is probably very, very possibly not a proper bottom. And then we would want to see this as well, along with the other metrics that we talked about, the other things that we talked about, whether it's the funding rate, whether it's the volumes drawing down, whether it's a divergence between accumulation distribution indicators and the price, or the RSI. So we want to see all of those things. I will. One last thing to mention for today is that the FOMC meeting is in about 5 hours. Our friends at CME have a very handy countdown page here. So it's in 4 hours, 49 minutes. It's an important meeting, as all FOMC meetings are, especially in this environment, because the market is going to be very keenly looking for their views on the interest rate hike and whether they're going to do it earlier or not, or as early as March could happen. And if that happens, traditional markets are going to take a hit, and then we can expect Bitcoin to follow them because the correlation has been strong so far. So that's where I'll end the markets discussion. I'll hand it back to my friends.
Quick question about the meeting, though. That isn't going to be, we won't really know anything about that for another few weeks until the minutes come out. Is that right?
No. So they will do a press release. They will do a press release after the meeting, and the minutes do come out after a few weeks, and then you see that happened last time as well. I remember the meeting happened, and then the minutes came out. But the after the meeting, they do give a press release.
Okay.
That's what I remember. Right? Adam, Olivia.
Honestly, not sure.
I'm under the assumption that there's a press release that comes.
Yeah.
a
There's a
lot
press
closer
release.
than after.
Yeah. The press release comes first, and then the minutes of the meeting come after a few weeks.
Yeah, and I saw somebody tweeted out a chart today that was basically the FOMC meetings plotted on the Bitcoin chart, and it was presented without commentary, but just from looking at it, it was one of those situations where it's like sometimes price goes up after this meeting, sometimes it goes down after the meeting. So there wasn't any like, which was probably largely dependent on what was said at the meeting, what the press release said.
Right.
I know a lot of people going into this one are expecting, for whatever reason, the price of Bitcoin to increase. I sort of share that expectation, but I don't expect it to get necessarily much further than 42,000 USDT or maybe 43,000, in which case I think that a lot of players are keen to get short or to add to their shorts.
Yeah. Volatility, I think, is almost guaranteed around the meeting time and after the meeting. But up or down is kind of like a mixed bag depending on what the market thinks. If they think they're being too hawkish, the markets react negatively. If not, they obviously react positively.
But people
Yeah,
are
and looking-
expecting interest rates to be raised, right?
Yeah. They're just looking for like a schedule. If they say that if they talk about, let's say, employment data, and they say that they're close to full employment and the unemployment rate has fallen in the U.S. Significantly, then they would argue that interest rate hikes are feasible in the near future, and they could do them as early as, let's say, end of March, where I think the next meeting is, I think it's end of March or mid-March. If they schedule for then obviously the markets could react negatively for a while. But then if all those things are priced in already, then we may not see a very big move.
Yeah, it seems almost inevitable, though, that any increase in the interest rate is going to have a downward pressure on like markets in general. I think just because now it's just so cheap to borrow money. I mean, it's essentially like nearly free. So as that starts to come back in line, as we've seen like pre-COVID levels, kind of just saying like, okay, fun times are over a little bit. We got to get back. Interest, inflation rates are starting to be a concern for sure, and it's not transitory. So,
and aside from just like greater macroeconomic things too, I think there's certain Bitcoin specific or crypto specific events on the horizon that are worth considering that people aren't necessarily talking about right now. One of those, which has a lot of mystery surrounding it still, is the Mt. Gox settlement, which will have undoubtedly massive consequences on the market. For listeners who don't know, essentially there's an extremely large amount of coins that are owed to claimants from the Mt. Gox hack, which was what year was the Mt. Gox
2013,
hack?
2014.
Yeah.
So there's a lot of speculation about whether those coins are spoken for or not, whether they're already sort of like whether they've already essentially been traded over the counter, and they're not just all going to be sort of dumped on the open market, which is what a lot of people fear. That's one major event that could potentially be being in the process of priced in right now.
Yeah, no, I can definitely say, because I think it's about 140,000 coins that are going to be redistributed to the claimants. So yeah, and those were people who had Bitcoin back when it was trading in the hundreds of dollars, even under 100. So if they could even get a fraction of what they had then, selling now is still going to be a huge profit for them. So I think that, yeah, whether there is over the counter, trades happening, there will be some people back then who have just been watching Bitcoin go on these, parabolic, going to the moon and just being like,
Yeah.
I wish I had my Bitcoin. I think they're going to want to try to get what they can.
Yeah, I mean, generally speaking, if you're like a Bitcoiner, or you're an OG or you're a whale or you're an institution or whatever, if you're on the buy side of the sort of macro spectrum, then you definitely would want the Mount Gox coins to be dumped into your bids as low as possible.
Yeah.
Like no, like if you know that there's going to be a massive injection of supply essentially, because Bitcoin has undergone what a lot of people like to claim as a supply shock, right? There's just not enough new coins, especially with another halving 2 years away. There's just not enough new coins, right? So demand outstrips supply, but there presumably would be a massive injection of supply. And when that happens, you want to get it as cheap as possible. Whether that be, I mean, some people are looking at stuff like 18,000, for example. I mean, why not? If you are an institution or you're a big whale or a big player, and what happens this year doesn't really matter to you because you're not in a position you need to sell or whatever, then why wouldn't you be happy to try to push the price down as low as possible and then absorb that supply as low as possible and then just return back to up only?
Yeah, I think breaking under 29,000. I think that's even the point. It's had two tests on Hunane's chart. I noticed going way back to the beginning of this cycle. There was a right before the Tesla news, or maybe it was the Elon news, something about that. It like went up to just under 42,000, didn't cross 42,000, and then dropped down to about 29, which is then the price again we saw as the short term bottom from May, or no, sorry, not May. What was it, July? And so if that breaks through, I definitely think that a retest of the 20,000, pre 2020 all time highs, going back to 2017, that could be a point where, it could fall pretty quickly.
Well, and also there's essentially no real buy volume right now either. I mean, you have like retail buyers, sure, and stuff like that, and you have the order books are pretty thick right now at 30,000. Like they're pretty stacked. But that could be to try to keep the price above a certain level so that shorts can continually get filled. And one of the big indicators I think still is the Grayscale Bitcoin Trust, not premium rather, but discount, because you could still essentially buy. That did increase. It was like minus 35% or minus 30%. That did increase on this last bounce to about minus 20%. But you're still looking at being able to get like institutional level Bitcoin exposure at a 20% discount. And if people aren't jumping all over that, that's a clear sign of a lack of institutional demand at these prices. And also, I think there's some fear. I don't know a lot about this as well, but I have a friend who talks about it. Grayscale's interest in turning GBTC into an ETF, a spot ETF, could also be like real put a lot of sell pressure on the market, because that's a lot of Bitcoins that could get dumped for cheap. So again, I don't know the specific details about that, but I think the sort of too long didn't read is that those discounted Bitcoins would be essentially instantly profitable, so there'd be no reason not to dump them.
Why does that discount happen again with GBTC? Like, why? How is that possible?
Should go back and read our article on it.
Can you explain it? Yeah, Hunain, can you
Does anyone
explain it better
remember?
than me?
Yeah,
Well,
I think what happens is the problem with GBDC, the discount, is because those shares, the GBD shares, are not non-redeemable. So you can't
yeah.
redeem them. You can only sell them on the secondary market, and you can't get Bitcoin for them. So anybody who owns them does not have a claim on physical Bitcoin.
Right.
So with that, there's a big limitation over there. So essentially, when there's a lack of demand, anybody who can sell will have to sell at a discount because you can't even redeem it. You can't even get actual Bitcoin for it. It's like a closed loop system. So it's kind of like it only works when you would imagine that there's not a lot of Bitcoin going around and institutions want like a secure exposure to it during a bull run kind of market. But during a bear phase, for example, if you want to cut your losses and you start selling it, there's very low demand for it because like I said, there's no redeemability, there's no actual physical
Okay.
Bitcoin. It's just like a share that you have to hold indefinitely and then trade on the secondary market. And
Okay.
if I'm not mistaken, I think all trades for GBDC are OTC. I think so. They're not even on an exchange, so there's liquidity problem as well.
Yeah, I think that's true.
And so then if it were to transition into an ETF, it would go onto an exchange, obviously, to be traded as a fund. And
Good job.
yeah, but that would then and if it were spot, then it would also kind of clear up those that getting in and out a lot easier. And I don't know,
Yeah.
would the I don't know if the fund would actually sell the BTC. Uh,
So how they settle, I guess, just they'll have to decide. I mean,
yeah, but I still think we're pretty far off from a spot ETF. Um, I don't know. There was a lot of talk, as the futures ETFs were being approved, uh, and a lot of reasons why the regulators are a bit, uh, still a bit concerned about, providing a spot ETF. Although that would actually have, an impact on price and supply. So while there are a lot
Well,
of, yeah, uh huh,
I was just gonna say, well, you could see a perfect storm situation line up in theory, in which you see Mount Gox FUD and all this stuff hitting headlines. People really start capitulating. The price of Bitcoin really starts tanking. Everyone's, it's really far away from all-time highs around 60K now, and everyone's panicking. All that stuff would be a perfect time for these same players to accumulate with the knowledge that a spot
yeah,
ETF is coming. It'd be
yeah.
perfect.
No, I was actually going to say
Yeah.
also, like, with the halving, we're about halfway through this halving cycle. So uh yeah, kind of just, there's a lot of bumpy road ahead in the short term, but I think long term, like Hunain was getting at through this market update, is and just kind of market overview, is that there are times to accumulate, and you know this might be one of those times.
well,
Yeah. Speaking of that, sorry.
no, you go ahead.
No, speaking of that, I just had a question for all of us. Is that if, let's say, we find a bottom structure here, and we're thinking of like, kind of investing, not financial advice for anybody else, but if we are all thinking that we want to get something in at the bottom, which would be your 3 or 5, altcoin picks, or even Bitcoin or whatever you want to buy at this bottom structure, thinking that from here it's up only, let's say. And if that does happen, we're looking at between 5 to 10x gains at least on altcoins, right? If you catch like a solid bottom and then it's up only from there. So what would you get? It's just a curious question. What would you get, like 3 to 5 coins you think that you would buy at the absolute bottom that you can?
Sol, ETH.
Not Soul.
I don't. Yeah, you guys can go. Other than ETH, I don't know.
I'd
probably go,
probably,
yeah.
you go ahead, Maxwell.
Well, I mean, I'm just looking back at kind of the back to like 2017, and that the ICO bubble, and kind of what we think of as dinosaurs now. Uh, Tron, and all the Bitcoin forks and all of those. It's not like those have done really well, throughout, and then even going back to the kind of the early DeFi phase, a lot of the DeFi tokens, that had some promise. I think we'll start to look at tokens that became really popular in this cycle as dinosaurs, going forward. So I think trying to pick the ones that have like really like crucial, you know, like propositions. So I think like Chainlink, like an Oracle service. I think that that's going to be just kind of a bellwether. I think that Uni is also like a like a long term, just because of the volumes that are still, and just how many people are still working on the protocol. So yeah, I think maybe more towards those, but at the same time too, with an NFT kind of craze, I'm interested also in like looks, for example. I think that having a community run DAO for a NFT marketplace could have a potential in that kind of next phase of the market where we go. So
I think also there's still more room for metaverse tokens, so-called metaverse tokens.
True.
Like, I don't know, like Mana.
I think metaverse tokens are big. For me personally, with stuff like Chainlink, I'm not interested in that whatsoever. I would say that would be more of something that is likely to be looked at as a dinosaur coin than something like Sol.
Yeah.
Also, Uni, for me personally, I don't really want any governance tokens. I have no interest in governing whatsoever. I'd rather just have the ETH. I'd rather just have like the infrastructure layer sort of token. So with that in mind, like if we were looking at a bottom, the things that I really want to have exposure to is like Sol, Luna, Avax. Like those three, I do want those three, even though I'm regularly sort of bearish on Solana. I still would want exposure because I do think we're looking at a multi-chain future. So also with that, I would want exposure to more even newer and less known layer ones, stuff like Metis. So I want some exposure to those things as well. And GameFi tokens for sure. SocialFi, which we haven't really seen anything coming around yet, but I think SocialFi is kind of next. I definitely want exposure to any SocialFi tokens that emerge. GameFi tokens specifically. Again, a lot of these are like governance tokens, and I don't necessarily have a lot of interest in governing. So, but I do want GameFi tokens that have kind of like reward value, like play to earn tokens essentially. So I'm definitely looking at with the Prime proposal that just came out yesterday for the parallel. Yeah, the parallel card game. Like, I definitely want to get exposure to Prime, the token, pretty much as soon as possible. For anyone who follows me on Twitter or anything, like I already have a lot of like parallel cards, like the NFTs themselves. I've also sold some NFTs and whatnot, but in terms of the tokens, I definitely want token exposure. So
What
that's
about,
that's.
Sorry, I didn't mean to interrupt your conclusion.
No, go ahead.
Adam. What
No,
about
I
like
don't.
Polygon and Polkadot? What's up with them? What do you guys think?
Matic. Yeah, I think, I don't know. Adam, wouldn't you put Matic in that list of the L1s?
Yeah, I still have some Matic exposure now, basically because I'm using it to provide liquidity on I think Hop protocol and the expectation of receiving an airdrop for that. But yeah, I would include like sort of some layer 2 tokens as well to that. Maybe I'm not personally as interested in layer 2 tokens as much as I am in the layer 1, the alternative layer ones. But I think there's plenty of upside for these. And like specifically, I mean, that's a heartbreaking chart because that was like really like fresh new all-time high, like price discoveries coming up only from here, and then everything just crashed. Well, and before everything crashed, Matic had there was like a bug in Polygon that started to hit headlines that didn't actually do anything because it got solved before it could have been really bad, but then it was like just sent it straight down.
And
but I see a good future for Polygon for sure.
Yeah.
When I said, wait, first of all, when you said hot, that are you talking about Holo? What did you say?
No, it's called Hop Protocol, which is
Hop. Okay, I was like, what?
Yeah, it's like a decentralized exchange, a Polygon-based decentralized.
But when I like kind of jokingly mentioned Sol, you guys were like, no. But what do you? I'm not sure we need to really get into the Solana situation, but like,
Wait,
do
before we
you
do,
have
can we
short
hear
or long term
Hunain's?
thoughts? Yeah, Hunain, you go
I want to
first.
hear your
I'll come back to
No,
opinion.
sure.
Sol.
No, I agree with what Adam said as well. What I would do probably is look at the coins kind of that have shown relative strength just before the crash and during the crash as well. And I would probably pick some of the leaders from each sector that I'm interested in. So, for example, I'll probably get one from the NFT space. We're talking about NFT space, we have very limited options. For example, Looks and SOS. I'm talking about like an OpenSea competitor. So, if, for example, NFTs go big, for example, we saw Facebook kind of showing interest in an NFT marketplace. So, when that actually happens, and if that happens, any alternative we have in the decentralized space is probably going to shoot up, just like we saw with GameFi tokens. So I'd probably want some exposure to, let's say, Looks or SOS. I'll have to see which one is kind of like showing relative strength and has better tokenomics. I haven't really looked into it, but definitely something that I would look at having just a little bit of exposure. I mean, because if you had just a little bit of exposure to Sand and Mana just before Facebook talked about metaverse, you'd have made significant gains. So it's not that you have to park $10,000 in them. Even like a $500 or $1,000 position is just enough to kind of reap some gains if that off chance that does happen. So I think that's kind of worth the risk reward at this point, having seen how the GameFi tokens moved. Then I'd probably go into some GameFi tokens. I'd probably get some L2s, some DeFi. So for example, Matic I'd probably get Sushi, definitely Balancer. I would get ETH for sure. I would get Phantom for sure. I would get probably Looks or SOS. I would probably focus on these, and maybe some short size positions just for the moonshot kind of possibility.
I wish I could claim my Looks, because if I could have claimed it, I could have sold it for like $20,000, but I can't because
Probably.
Treasure and MetaMask preventing me from earning free money. Yeah, bad timing.
Yeah.
So, Olivia, you were talking about Solana. What's the situation there?
I mean, obviously, like short-term situation has been lots of problems with the network, congestion and not congestion, just not full functionality. So like, I don't know that much about it. You guys definitely know more, but I'm just curious, like, what your knee-jerk reaction was. Maybe Maxwell, that was just you who reacted um, to like more long-term or mid-term.
I think I've just had my time on Solana. Like, yeah, okay, for like an investment, yeah, Sol might be, worth buying as it, reaches its lows, because probably there is, upside. But I've just been, I don't know, I went on Solana for some time because it was actually cheap, and like, you could actually like, you could DeFi without paying exorbitant fees on Ethereum. But I don't know, just the user experience in a lot of ways was kind of janky. Like every time you refresh, like your like wallet is disconnected. Like on anywhere from what I found. I don't know if that's fixed. And you know, yeah, I think maybe because it was so easy to like move money in and out, like um, I don't know. It just felt like everything on Solana, like I'd hear about it, but of course it's already too late. So um, I don't know. I'm just a little bit bitter towards Solana.
I mean, I've
Got it.
been a Solana naysayer like on Twitter for a long time, but I would still want exposure to it because I mean everything is always going to have growing pains. Like Ethereum had plenty of
Yeah.
growing pains and still does. Um, I think Solana is big enough at this point with a big enough sort of network effect. It's becoming attractive to developers. Always steadily increasing. It's like sort of dev talent and whatnot. So looking long term, I think there's very little reason why Solana wouldn't exist or shouldn't exist. Because I don't think like Ethereum is going to be able to compete in the raw sort of transactions per second and like cheap fees anytime soon in the way that Solana does. So I expect Solana will run into more issues, but will continue to like sort of iron those out. Um, on like a theoretical, like philosophical level, I'm certainly more still in like the ETH camp and all that stuff. But Um, I definitely want, but I would want of the big three, like Sol, Luna, Avax. Solana would be like the one that I would probably want the least exposure to, unless it gets really cheap. Unless it just keeps tanking, then I would want more. But I do like Avax quite a bit because I think there's a lot of room to build on Avax, especially GameFi stuff. A lot of it, I guess, also depends on like when a new game hits that's actually like somewhat good and starts to get buzz. Like DeFi Kingdoms was one, and these things. Like when one of these hits, I think you know it's really good to be in that chain.
So essentially, just get exposure to everything.
Everything new and
Still quite a select list.
yeah, I think it was a select list. I think all of ours.
Yeah, I definitely don't want
I
exposure
think
to
we all.
everything.
Yeah, I think we missed out all the dinosaurs. Nobody's interested in Litecoin
Yeah.
anymore. Bitcoin
EOS.
Cash, BSV,
Or
EOS, XRP even. Nope.
Yeah, there's just no market fit for these things. Litecoin, even when Bitcoin was like breaking its old all-time highs at 20,000 and going up, like I could still see a fit for Litecoin, which was basically just exchange transfers because it was so much cheaper and faster to transfer Litecoin from an exchange to an exchange than it is to just transfer Bitcoin or Ethereum. So like basically what I'm saying is you could have Bitcoin, you could have Ethereum, whatever. You could just trade it for Litecoin on basically any exchange, transfer the Litecoin, and then trade it back, and that's cheaper than paying the fees. But even that, I mean, that was sort of like the last gasp for like Litecoin having any like worth whatsoever.
And I think that's changed a lot because of the multi-chain USDT thing now we have. Like USDT is now available on Tron, it's available on Solana, it's available on a multitude of chains, which are significantly cheaper. I mean, the TRC20 USDT is so cheap and it just comes in 2 minutes. Like the transaction is confirmed within 2 minutes and it costs you, I think, in cents something. So earlier when you were moving Ethereum USDT, that was like cost prohibitive, but this one is so it's kind of changed everything, and now Litecoin, like you said, doesn't really have a fit. Yeah.
Also, I'm sure that there are things that nobody, quote unquote, nobody even really knows about yet that are going to pop up like this year that
Yeah.
will really take the industry by storm. Which one of those being, I think, like I mentioned before, like some sort of social fi thing, I think is going to really take over.
I think it will be interesting just to compare, especially in the macro environment, though. You know what? If whatever comes next is, you know, if it sees the, I don't know how to explain. Like, you know, when interest rates are so low, and when, you know, people are getting stimulus checks and sitting at home, and, you know, Bitcoin's going up. Like, I mean, I think there is a lot of, you know, we've talked about, you know, before with, you know, kind of these money games, just being able to, like, you know, move it around, and you know, it's kind of just magic internet money, where, you know, in a you know, in the real world, when you know, if inflation is actually you know, something we really do see, you know, like we are kind of seeing, price at the pump, and you know, kind of our grocery bills going up, you know, it will be interesting to see what kind of, you know, new whatever blah blah summer will be in that environment.
Blah blah summer.
Yeah, social summer.
Yeah. And then like which and how like the big tech companies get into it, which tech companies are going to get into it, how they're going to. That's inevitable.
There's also a lot of people who are in sort of like okay. So I think there's a lot of people who are relatively new to the space, right? And care very little about Bitcoin, actually, at least in terms of like investing in Bitcoin, because they're more interested in playing money games, right? On bridging to AVAX and aping into whatever Ohm fork there is, or what have you. And a lot of these people, I think, maybe grew slightly arrogant in believing that the market was no longer tied to Bitcoin, because while Bitcoin stagnates or while Bitcoin's slow, that gives a lot of room for these things to really pump. But and we saw this happen again. At the end of the day, these all the altcoins, everything pretty much gets used as exit liquidity when it has to for Bitcoin. So we saw when Bitcoin really started to look like it was in trouble, there were these last gasp sort of pumps with like Jewel, with Crypto Raiders, Raider token, with a lot of these like uh, fork money games tokens that got a lot of people still like, look, we're not, who needs Bitcoin? Who even needs Ethereum? Like we're really at the bleeding edge. And then those things took the biggest hits of anything, because at the end of the day, there's only so much liquidity and so much money to go around. And that's just exit liquidity for everyone to escape back into Ethereum, back into Bitcoin, and or back into stablecoins.
Mm-hmm.
And I think maybe, if I want to be a bit more bold too, I think maybe there's still more lessons to be learned in the crypto market that maybe people haven't experienced enough sort of like pain and loss in the altcoin side of things, that people who are veterans of the space, and by veterans I mean just since like 2018, experienced like bag holding what are now dinosaur altcoins, like bag holding those down so far. So a lot of us, it's like, well, we've been here before and we're not really panicking stuff, while other people who are relatively new and they're like, why is my Raider down 60%? It's just like 60%. It's like the meme with the Simpsons, like 60% so far.
So far.
No, I agree with that 100%. I think you had to be a bag holder in 2018, 2019 to be cautious enough to take profits this time around. So the new people this time around are probably going to be a lot more cautious next time around, if they are going to be around, which is important. Definitely. It takes a bull run to learn from the mistakes.
Yeah. And a thought I had today too before the podcast, like sort of related, was I was thinking like, I don't mean to sound, I don't want to brag or sound big or something, but like this year I feel like I did a fairly decent job of like selling tops. And I've had people like DM me and stuff like that and asking like what metrics I sort of use to gauge this, with like Olympus DAO's Ohm, with some parallel NFTs and stuff like that. And like, it's not just like it's kind of like having just like a feeling, but ultimately I think that feeling just stems from like when nobody will stop talking about something, that's usually a pretty good time to start getting out. Like if you're on like crypto Twitter or something and just like everybody is talking about something, whether that be Ohm or whether that's Jewel or whatever, if it's just like it reaches a critical mass where nobody will stop talking about it, that's usually like, I don't know, 9 times out of 10, that's a good time to start like at least decreasing your exposure to it, because nothing goes up forever, no matter how good it feels at the time. Like nothing goes up forever. Not financial advice. Right. So I guess on that note, we'll wrap it up here. I'd like to thank my colleagues Olivia, Maxwell, and Hunain for joining us. Thank you, Hunain, for the market analysis, which was really great. So you know the drill. If you're watching this on YouTube, like, subscribe, ring the notification bell, all that good stuff. Leave some comments. You can always leave comments. We'll probably get back to you about things you want to hear us talk about in the markets, topic ideas. I mean, we'd love to get your feedback. Also, if you're listening to this on any one of your podcast streaming services of choice, like and share and do all those things. It really matters. Yeah, so until next time, saying goodbye for Olivia, Maxwell, and Hunain. My name's Adam, and until next time.